Welcome everyone back to Pete's Investing Updates. We review the weekly progress of some key share market world indices and the gold index. In this week's summary, we're focusing on the ASX again and see if there's any sign of a recovery. But also we're going to be looking at a couple of other indices in our portfolio. They've all dropped, but we'll have a quick look at those. If you want me to review an index or a commodity, put it in the comments and I'll cover it in a future video. As always, click on the subscribe button, the notification bell, and like the video to support the channel. First, let's look at the playlists. This is where we look at the indices. We publish those there. Some blue chip shares in our portfolio we publish there, those results there. And our strategy playlist. That's where we include the simple trading strategy, the average down process, and some money management ideas. Not offering financial advice, it's purely an educational video. Some things to consider. We track and trade on a 15-minute chart. And this week we also backtest results on a daily chart. We track and backtest revenue over drawdown requirements as a percentage to optimize our returns with less exposure to any negative results we may get. Backtesting transacts with 5 contracts per trade to increase revenue. We simply increase the number of contracts, but beware, this will also increase your drawdown. So ensure you factor in this with your money management strategy. Dividends are not included in our backtesting, so for all revenue generated, we can add a bit more to the bottom line with dividends which are paid out. So let's get started. So first off, I just want to quickly summarize these line charts of all our indices we're tracking. So the US market has dropped, Aussie 200 has dropped, the German DAX, the FTSE, even the gold index has dropped, and the Chinese market has somewhat stabilized over that period over the last couple of months, but it's still also dropped this week. So let's first of all go to our summary tables. Now this is the daily chart. The daily table of results, and this is the 15-minute table of results. Now they're both using the same logic to enter, average down, and exit. The only difference is on the 15-minute chart we're using a CCI crossing above zero, CCI 100 crossing above zero, and on the daily chart we're using a CCI 14. So what that looks like in practicality, this is our 15-minute chart for the Aussie 200. CCI 100 breaks above zero, as in that point there. That's where we enter our first lot of trades. In terms of not averaging down, so it enters there and it closes out there when it reaches our minimum profit gain. When you average down, such as in this example, you enter a trade there when it breaks above zero, and you enter another trade there when it drops far enough and the CCI breaks above zero again. CCI 100 breaks above zero. So the way that looks in terms of the logic on the 15-minute chart, again, the CCI 100 breaks above zero to enter. We close when the moving average 20 becomes negative. So again, in this case, the moving average 20 becomes negative at that point, and we close it out. Now, in terms of averaging down, the close must be less than the average price. So again, that close there is less than the average price. So as long as the latest price is below the average price, which is that point there initially, then we consider an entry. The second criteria is it must drop down far enough before we consider the entry. So that's the second level of criteria. And that's what that's saying. The opening price minus the close is greater than the average high-low of the last 100 bars. So it's saying of the last 100 bars, the high-low range must be reached before considering entering anymore. Now that's a calculation because I'm using that based on the bars or the chart shown. You can put in, if you like, a monetary, an arbitrary loss. So in other words, we can put in a 10% or a 20% loss. Now in this example, for example, we could always use a 10 or 20% reduction in price. So you can see there, it's the minus 1% so far. So you can see there, it's around 1.5% loss on this particular index. So we're saying if and when it's less than that loss, in this case a 1% loss, and the CCI breaks above zero, which it did there, then we can enter the second lot of contracts. And again, we exit, because now the average price comes down from there down to about there somewhere. We say we can exit once that profit is reached, minimum gain is reached, and our moving average 200, moving average 20 starts breaking down, which it did there. So that's our moving average 20 exit, and the close is greater than the average price of the last 100 bars. The same logic is used for the daily chart. The only difference is we're using a CCI 14. Everything else is the same in terms of the average down and the exit. And again, that's what that looks like as an example. We enter there, moving average 14 breaks above 0 to enter. We reach our minimum gain, and then we close it out when the moving average 20 starts breaking down. And let's look at a quick example of a average down. So again, we enter the first trade there, moving average breaks above, sorry, the CCI 14 breaks above 0. Price drops down, remember, it's a first level. The latest price must be lower than the opening price. And we enter another set of contracts when it's dropped down far enough. And also when the CCI 14 breaks above 0 for a daily chart, we enter another lot of contracts. And then we close out those two positions. You can see there, those two positions in red are closed out. Once we reach a minimum profit gain, and the moving average 20 starts breaking down. So let's just quickly look at the analysis of the 15-minute chart, how it's dropped off in the last couple of weeks. After entering a lot of trades there, it's gone sideways. We enter another lot, again, based on average down technique. It's gone sideways, further drop down, entered another couple of trades there, and it's falling down again. Now, I've drawn a resistance line or a support line there, and that's shown on the daily chart. That's what this looks like. So you can see here during the COVID outbreak, the price dropped dramatically, and it's been appreciating and rising steadily in line with this support line. If I remove that support line out of the way, you can see that that's also in line with this moving average 200. So it's tracking along that moving average 200. Hopefully it bounces back like it did back in these instances. And if it does, we'll close out with a nice little profit. Otherwise, the danger is if it drops below this support line or this moving average 200, and it keeps dropping down, we may see a bit of a free fall for the ASX. And that is effectively the very same scenario for pretty much all our trades. I'll quickly show you, let's say, look at the US market. It's pretty much the same scenario. You can see there, COVID, start of 2020, price has been going nicely, tracking above the moving average 200. And that's also now showing a drop in price, similar to what it did back in those instances. One more demo. I'll show you the FTSE, the English market. Very similar. COVID, big drop, and it's recovered and tracking above the MA 200. You can see there it's touching it in this instance, it's touched it there, and it's touching it again. So hopefully it bounces up again from there for all of our trades. And lastly, just one more time, let's look at the China market. Again, that's a 15-minute chart. We use up all our revenues in a 15-minute chart because we entered so many contracts. Again, be careful of entering too many contracts. Again, watch the money management video to better understand how to trade, especially with CFDs. You can see here the China market, it's been doing nicely, but when it does badly, it does really bad. It's dropped off substantially back here in 2018. Again, start of 2020 for COVID, but it's risen quite astronomically compared to the other markets. But now it's also dropping quite substantially compared to the other markets as well, coming back to this support line that we drew. So that's probably got a lot more to go in terms of free fall before we get any more positive about the China market. But considering the political, economic environment with what's happening in China at the moment, I'm not too confident with a bullish market in China at the moment. Anyway, that's it for now. I'll just finish back on the daily table of results. Feel free to subscribe, hit the notification bell, and like the video to support the channel and digest the strategy we're using there. Thanks guys, and see you in the next video.